Good morning, good afternoon, good evening, traders from across the globe. Welcome to the Short-Term Trading Live with Oscar's weekend webinar. Traders, as you know, we are the short-term traders with the long-term plan. And our plan is to be here 10 years, 15 years from now, still trading, still bobbing and weaving and getting in and out of these markets and doing this for a living. With that in mind, traders, this weekend webinar is for trading. It is 020709, so this is based towards next week and going forward. Traders, what I like to do in these weekend webinars is basically try to keep us all in tune with the larger picture, a little step back, bird's eye view, look down, and see if we can spot which way we're going in an overall trend. This way we can trade in and out as a day trader in the proper direction. So this video, I think we're going to talk about the CRB index once again. Traders, last weekend webinar was all about the CRB index. And I explained to you that the CRB index is an index of a basket of commodities that generally will show you commodity inflation. That could also mean inflation in the economy itself, but let's talk about commodity inflation and the CRB index. The CRB index has a bunch of components in it, and then inside of each component are smaller components. In other words, it's made up of the energy sector, the grain sector, the industrial sector, the softs, the meats, and the metals. Now, in the energies, we have been noticing that they are nowhere near the Omni proprietary moving average, as I have on here on the board, but the CRB index in last week's video was getting very close to getting above it. So I went and did a study last week, and I looked at all the components of the CRB index, and they are in the energy, crude, heat, and natural gas. The three of them are not near the Omni proprietary average, so the energies are not with the CRB index as far as getting above the average, right? The grains, you have wheat, which just got to the average now and is hanging out there. Soybeans and corn. Corn is much closer to the Omni average than it was in last week's video. And soybeans is well above it, or at least hovering above it, no problem. Then in the industrials like copper and cotton, cotton's above the Omni average. And copper raced up 12 full points on Friday and is kissing that average. Then in the meats, you have live cattle, which is very close, and lean hogs, which is not near the average. And then in metals, you got gold, silver, and platinum, and all three are above the average. So what I'm getting at is that more commodities this week are above the Omni proprietary average that make up the CRB than in last week's video. And hence, what happens? The CRB gets above the Omni average. Traders, I told you, if it gets above that average, I'm going to start looking for commodities to move higher, possibly a run on commodities. We'll see them run up. Happens almost every year. And the fact that now at least 70% of the commodities that make up the CRB are above my Omni proprietary average, and the CRB got above, it's an eye-opener, traders, and we'll talk about that in the video. The other thing I want to talk to you about is this. The indices had a nice rally this week. The NASDAQ got above my Omni average and broke out of an apex or a descending wedge. And it looks really, really strong if you're looking just at that chart. And the fact that it's above my Omni average, I am definitely looking at it. But traders, I am here to say this is a bear market. This week alone, we got China's numbers. They're coming out on Monday, China's production numbers. Tuesday, and I don't know how much that affects the U.S. market, but it's there, and in the long run, it certainly does affect our market. Tuesday is wholesale inventory numbers. Wednesday, you have international trade deficit figures, and you know that's going to be horrible. On Thursday, we have January's retail sales and December's business inventory numbers. Friday, the University of Michigan will put out their report. So there is absolutely reports coming out that should be bearish. We have ran up for a couple of days in the S&P, led by the NASDAQ. It's been strong all week. We can see that. But again, traders, we're supposed to stay in tune with the larger picture. The larger picture at this point is we are in a bear market, right? It is okay to have some sort of a rally in a bear market and still be a bear and still trade those rallies when they stop going up and come back down. Now, as day traders, what we're lucky about is we just got to watch it flip from bull to bear, and then we trade bull or bear, up or down, depending on how the analysis flips. But for the longer term view, you have to always remember where you are in the market's history, in its life, in its story, like I like to say, that each chart, each day is like a chapter in a story, and it's a never-ending story. Where are we in that story in the indices? Well, I will tell you, the indices, meaning NASDAQ, S&P, the ETF, which is the old mini Russell, you have the Dow Jones Transportation Average, the Dow Jones Industrial Average, those indices are absolutely heading towards my Omni proprietary moving average. Traders, again, I can't just flip to bull, and that's not my style. The analysis would have to tell us, but I have a series of charts here that I think may put the brakes on just immediately turning bullish. I've gotten lots and lots of emails and a lot of chatter in the rooms, and I realize how bullish people are getting. Let's go look at some charts. Let's look into this a little bit deeper and see if we should be jumping for joy or being very cautious. And you know me, I'm a bear, and if it goes up, I'll trade the upside, but very, very cautiously. Until we become a bull market, I am a bear in a bear market. I do not trade what I hope for. I do not trade what I think will happen. I don't trade what other people think will happen. I purely trade the analysis because all the fundamentals come out in the charts first, in my opinion. So, I'm going to take you to a few charts now. Let's go look at some charts, traders, and then we'll come back and decide what we all think about this. Let's go look at the charts, traders. All right, traders, the first chart you are looking at here is the NASDAQ March Daily Bar. And traders, when you look at this chart as an analyst, all you can say is,
well, I've been down so goddamn long that it looks like up to me.
Traders, you know what? That looks so bullish that even Jim Morrison wants to come back and buy some. But I say, let's look a little deeper into this chart before we just go nuts and call it a bull market. As we know, we are in a serious bear market, have been for quite some time, started to flatten out a little bit, and then we got caught in the NASDAQ inside of this wedge, right? Well, it broke out of the top of the wedge, traders, and it got above my Omni average, and I gotta say, for the NASDAQ, that looks bullish. Its technical indicators are bullish, but they're getting slightly stretched towards a little bit overboard, but they look bullish right now. And again, no joke, when you look at that, that's the first thing you can think of. I've been down for so long, it looks like it's going up to me. But, traders, we need to be careful of the larger picture here. Let's pull this next chart. It's going to be the NASDAQ chart again, but I want to show you another chart now with a little more in-depth analysis on it. Let's look at the next chart. Okay, traders, very same chart, NASDAQ March Daily Bar. And again, we're in this very large and well-defined wedge formation. The apex is out here somewhere, you know, but for now, we've gotten above that and above the line. But traders, here is something else happening right now. We are now in a parallel channel that is being respected by this NASDAQ. As you can see, top, bottom, top, bottom, top, bottom, right? So there is a good shot that it will fail here and drop back down, because why are we going up to begin with? The news is bearish. The environment is bearish. There have been more layoffs in the last 3 months than we've seen in 20 or 30 years. That is going to not help us by any means. It's going to hurt the economy, and we're going to feel it, traders. So I'm looking for reasons to stay in the bear camp, and let's keep looking. Now that you are in this channel, if it keeps respecting it, it's supposed to come back down and hit the bottom of it, right? Then you have a top here. This is going to be considered a double top. If it does not blast off on Monday into Tuesday, you have a double top, and we always sell double tops, always. We know that. So you have a double top, you have a day and a half above the Omni average, and you have the possible failure at the 65% mark of this angle or apex. I have taught this to many, many, many of my Omniacs, and I show them that when you have an apex like this, many times you get a false breakout right around the 65 percentile area, and by the time it gets to the 75% of the distance of this angle, it breaks down into the natural trend. So there is a double top existing for now. Will it exist on Monday or Tuesday? We'll see if it doesn't blast off right through it. The indicators are bullish, but you do have the chance of breaking out above this and breaking right back down the way it has been doing. Many of these small angles that we have found in these charts, I've shown you in many videos. You've seen it break down after a failure. So I'm looking at that and saying, okay, we're in a bear market. The double top is definitely something that you'd have to sell as an analyst, but we are above the average and we are above this angle. And you know what? That's where we are now. So I'm not going to put my opinion into my trading. I'm going to look at that and say, well, for now, you'd have to think about buying it. But you see what's happening here? You have reason to say don't buy it and reason to say yes, buy it. That doesn't usually happen with the Omni or with me. I do my analysis, I get a clear signal. I do this analysis and I'm told, boy, oh boy, you should want to believe it's going to go up, but you really can't because the larger picture says no. So it's confused, right? You ask me, it's a bit confusing right now. I'm more than willing to admit that. Analysis is never easy, but that's a confusing bit of analysis right there. So I start looking at more charts, and let's pull the next one. Okay, traders, the next chart you're looking at is the daily March S&P bar chart. Now, this one is in a big wedge, as you can see here, pointed out with the blue line, right? It's nowhere near it. It's not above my average. It just had a couple of days up only. Now, more analysis happening here. See this head and shoulders that's defined? Well, we're short-term traders, and this is a big enough formation, even though it's little in the larger picture. It's a big enough formation to trade, right? Now, I have shown you in many videos and many classes that many times if you have a head and shoulders formation, that a lot of times before breaking down, it'll run up and test the head, and if it fails at the head, then you get your breakdown. So here's your head and shoulders. Sometimes you get the run up to test the head, and then the failure. Well, what's happening here? Shoulder, head, shoulder, and we just ran up. We're not as high as the head yet. This could very well just be a test of the head, of that little head and shoulders, and right back down we go. We're not above the average, traders, and I want to see all the indices above my average before I start thinking bullish. So the S&P tells me that, look, you broke out of the smaller apex here, but you're inside of the larger one. And if you're inside of that larger one, that's the one you need to play. So even if there's room on the upside, traders, there's only room maybe to go up another 20, 30 points, and then you top out. So you see what I'm saying? There is no reason to want to get really happy here. Then the whole thing is a big head and shoulders that we're in right now, which is bearish. So I want you to realize we are in a bear market with bearish formations. So this could be a simple dead cat bounce, even if it comes. So for me, I'm staying bearish-minded, and if I have to get long for a couple of days, of course I will, but very quickly and almost using a scalper's mentality if I have to be long in a bear market. But I am staying bear-focused. Now, if S&P gets above that on the average, and the NASDAQ's already there, and the Dow Jones Transportation gets above, and the ETF Mini Russell gets above, and the industrial average gets above, well then, baby, we're looking at a new market. But we're not above yet. So please keep this in mind, traders. Don't go out crazy buying with this buying spree you're hearing on the street because it looks like it very well will fail. But you've only seen a couple of markets. That's been NASDAQ and S&P. I got a couple of more to show you. Let's take a look. Okay, traders, now we're looking at the Dow Jones Transportation Average, okay? Transportation average, in my view, is the leader of the indices. The NASDAQ follows behind it, and the NASDAQ pulls the S&P, so the S&P follows the NASDAQ, right? Well, you had a double bottom here, which we talked about in class last week, and we talked about possibly in one of my videos. I don't know if I ever pulled the transports for you, but I know I did it in class with the Omniacs. Double bottoms, we buy double bottoms just the way we sell double tops, right? Well, this double bottom certainly gave us a reason to think possibly it could go higher. The market has spent a couple of days going higher, but it is running into this resistance that you can see right here. And if it takes that line out, it's still not above the Omni average. This is only a couple of 100 points, traders, from where we are now to the Omni average, even if we get above the resistance line. So you cannot get happy with this chart yet. And once again, you're looking at, even though slightly lopsided, a head and shoulders bearish formation. Again, traders, I'm a bear in a bear market. There is no way a trader like me just flips and turns into a bull and starts calling for a bull market unless these markets get above my average and everything else within the chart points north. We are not there in the transportation average, right? It didn't make it. S&P is not there yet. The NASDAQ got there. That's the only one above my Omni average so far. Let's look at another chart here, traders. Okay, traders, now we're looking at the Dow Jones Industrial Average. So again, let's look right off the bat. NASDAQ, yes, above the Omni average. S&P, no. Then we looked at the, I didn't bring it up for you actually, but I looked at the E-mini Russell or the ETF, and it is not above. The Dow Jones Transportation Average is not above. And clearly right here, you can see the Industrial Average is not above the Omni Proprietary. So you only have one so far out of these that made it above. That does not make you run out and become bullish. Now, Dow Jones Industrial Average chart. Once again, that same angle or wedge formation that we've been working with in all the other indices is there and plain to see. Not a lot of room, even if you rally up to it. The average comes in right around where the resistance is. More reason to think if it ran up, it would fail there. And then once again, traders, you have this little head and shoulders right here. And we're running up and testing the head right now, which normally will happen before a drop. So as you can see, there are technical reasons for us to avoid thinking that this bull is coming because, as you know, I'll repeat again, we are in a bear market. We want to stay bear-minded. The longer-term picture is bearish. And if we get a little wiggle towards the upside, we need to know what parameters it should fail at in order to trade this properly. So that's what these charts were for, traders. Remember, 4 out of 5 are not above the average and are not calling for an upside move. Now, as I repeated, if these get above my average, well, hey, baby, rock and roll, but they're not there yet. So everybody, keep your powder dry. You know, don't get crazy with these bull ideas yet. Let's let the market talk to us and tell us if we should become bullish. Okay, traders, the next chart is the CRB index. This is the one I brought to you in last weekend's webinar. Now, traders, I talk about how well these channel formations work, parallel channels. Let's look at this chart, and we'll look at all of it. Back here, traders, before anything past this line existed, I was working within the context or the confines of this parallel channel, right? It started here, and I watched how it worked and worked and worked and worked. Then the market got out of it, and I paid no mind to it. And we got all the way down here, and today, as I was doing my analysis on this section here, I extended my parallel channel out to see what would happen. Look at this, traders. I found this amazing. It almost knocked me over. It held here, and here, and here. It held here, it held here, it held here, and then it popped. The whole time that it came anywhere near that parallel line, once it got above it, it bounced off of it. Again, it didn't exist past this point, and I was studying it up to here. I extended it just this weekend, which none of these lines existed until this weekend, and I was amazed to see how well the CRB respects these parallel channels. Then, as I do more analysis, I realize there's another parallel channel that we're in right now going the other way. You see the respect that was paid to this one, right? And here it is. And this is what makes this chart really interesting. If we can't figure out what to do in the S&Ps, I think we're going to get a crack at going shopping in some of those commodities I just spoke to you about. This is that chart that is the measure of commodity inflation. And I brought this to you in last week's video and said, if we get above this Omni average, we're getting close now, we got to start looking at other markets. Turns out 70% of all the markets, commodity markets, that make up the CRB are now above the average. And lo and behold, the CRB got above the average and held at the bottom of the channel and should now race to the top of the channel. 1, 2, 3, 4. Now we're here, right? Why not go up there? Why not? I mean, it's exactly what should happen. Now, we also have triple top. 1, 2, 3. This one didn't come in yet. We always buy triple tops. Like we sell double tops, we buy triple tops. This has all the makings of a market that wants to rally up at least to the top of the channel, maybe take out the triple top, and if it goes, it pulls the other commodities with it because basically they don't move unless the commodities move. Now, if you pull all the commodities I mentioned to you that make up the CRB and you look at my Omni average on those, almost all of them now are getting above that average while the CRB got above. That is not just mere coincidence, traders. That is analysis. It is markets calling to us, and it's the charts calling out saying you better pay attention because it looks like a run on commodities towards the upside is coming our way. Do your homework, traders. Pull the CRB index, pull the components of the CRB index, which I explained earlier, and see if you can find the same thing I'm looking at. So, traders, you see those charts? That CRB index, is that a killer chart? The way we paid mine to that channel all the way down. Once it got above, and traders, I did not extend that line until this week, and that line was drawn months ago. When I extended it and realized how many times it paid respect to that parallel channel, and then I realized with another one, hey, you know what? It doesn't take an analyst more than that picture and bullish indicators on top of it to realize the CRB looks like it wants to go. Traders, it's only the first day above the average, so I got to give it a few more days. But if that CRB stays above the Omni average a few more days, I'm going to start looking for a run in commodities. And then if we have to, during the confusion that we're seeing in the S&P and the indices till they get above the average or they head right back down again, we could sidestep them and go shopping in the commodities arena. That's the beauty of being a trader, right? You can trade all this crap, so we'll see what we're going to get. Keep your eyes open. Traders, I will do my homework. I will look for a trade for Sunday into Monday as always. If you'd like to see that trade, you come on down to my site. It's www.livewithoscar.com. I'd be more than happy at that site to teach you how to do analysis, just like what you've seen on the board behind me a moment ago, and teach you the proper mentality, how to execute those trades once you figure out where they are on the graphs. So come on down, traders. Do yourselves a favor. Get some more education in trading and especially in analysis because, boy, oh boy, these are tough times right here. Again, traders, you see the confusion in the indices, the S&P. Those indices are confusing. But we have the NASDAQ. And you know what, traders? A round of applause for that NASDAQ, boy. I hope and pray it leads us to the promised land. But I ain't betting on it, that's for sure, because we are in a bear market. And remember, traders, the weekend webinars are to keep us in tune with the larger picture. Right now, we're in a bear. If it's going to flip bullish, you need to have all the information pointing towards up, all the indicators pointing up, and all the averages that are important that we found when we broke and they got below those averages. You need to get above them before you can turn bullish. So stay bearish-minded with the possibility of a little pop coming, and we'll sell into that pop until told otherwise. All right, traders, make sure you never trade alone. I tell this to my traders in every video. There are thousands and thousands of Omniacs. They come from all over the world. Come to my site in the chat rooms. We are there to help one another every day and night. And traders, I tell you what, from the response I get, they are so glad they're not trading alone anymore. So don't be afraid of it. Come on down. The memberships are free, and there's lots and lots of help there for you. I do free lessons on the site all the time, traders. Come on down and see what it's all about. All right, traders, I don't think there's much else I need to do in this video. There's a lot of analysis for you to do. Make sure you do your homework. Traders, be in the chat room Sunday night so we can see where we're getting in and getting out. And I'll speak to you for the next video. All right, traders, don't forget, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.